The S&P 500 and the Dow Jones closed at record highs on Friday, gaining for the sixth week in a row, setting their longest winning streak on a weekly basis in 2024. Stocks in the Asia-Pacific trade mixed despite a strong handover from Wall Street. China lowers benchmark lending rates by 25 basis points. The GIFT Nifty is also suggesting a mildly lower start for the Indian market. Crude prices continue to fall after their worst week in over a year, with Brent slipping below $74 a barrel, correcting over 8% last week on fears of lower demand and easing geopolitical risks. Gold prices surged to a record high above $2,700 an ounce. HDFC Bank reported a steady second quarter with deposit growth outpacing advances. Kotak Mahindra Bank reported a weak second quarter with deposit growth coming in at a 7-quarter low, while asset quality also worsened, while Tech Mahindra sees steady revenue growth continuing for the second quarter in a row. In key earnings to track today, Ultratech Cement from the Nifty 50 will be reporting its results. Also watch out for numbers from Bajaj Housing Finance, the new kid on the block. Good morning. It's the start of a brand new week. You're watching Power Breakfast here on CNBC TV 18 in the Mumbai News Center. I am Hormuz Fatakia. Let's first take a look at how the Asian markets are faring this morning. It's a subdued to a mixed picture that's emerging from the Asia Pacific. The big news, though, that's coming in is that China cutting its loan prime rates for the 1-year and the 5-year tenor by 25 basis points. That's the big news that is coming out from China. The Hang Seng trading with losses of around 0.5% after that 3.5% surge that it had witnessed on Friday. The Taiwanese index is witnessing some modest gains. Absolutely flat trading in Japan this morning, as has been the Shanghai Composite, which is also trading just below the flat line. So not much major cues emerging from the Asia Pacific this morning. Pull up the GIFT Nifty as well, and that too is pointing to a subdued open. On the negative side, though, for our own markets, a 22-point implied open on the downside is what the GIFT Nifty is suggesting after the rebound that we saw from the lows in Friday's trading session. But moving over to Wall Street, where the benchmark indices notched new highs on Friday, the Dow and the S&P 500, that is, following strong results from Netflix and a broader jump in all major technology stocks. The benchmark indices notched their 6th week of gains, which is the highest on a weekly basis since 2023. And for the week, the S&P 500 gained 1%, as did the Nasdaq, almost 1%, and the Dow Jones also gaining a similar quantum. Netflix jumped over 11% on Friday after reporting solid results in its third quarter, beating estimates on the consensus front. Consumer giant Procter & Gamble also reported better than expected results. Also, there was some sluggish commentary coming in from the management there. Staying with Wall Street, let's listen in to Oppenheimer Asset Management's John Stolflutz, who hopes for a 25 basis points cut from the Federal Reserve by the end of November.
I think the Fed is pretty well stated that it's committed to ending this Fed funds hike cycle, but it also wants to be very careful so that Powell doesn't experience an Arthur Burns kind of situation. At the same time, he doesn't want to do like Alan Greenspan occasionally had, where he'd push the economy into a recession or near recession. So there's a balance here. Our take on it is, we want to see the non-farm payroll number that's coming up for the October, because it will reflect what happened in Georgia, what happened in Florida, Tennessee, and in North Carolina. And so let's see what happens. And I think the Fed could easily cut a quarter at 25 bips, either in November or December. It'll do it as needed, if needed.
That's all the global market action from Friday and this morning. But how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like and the stocks that are likely to be in the news as well. First up, Vivek joins in to get all the market cues we need to watch out for. Vivek, good morning. It was a strong rebound from Friday's trading session. How's the setup looking like this morning?
Good morning. You're absolutely right. Much more brighter outlook going into this particular week. Remember, it's an earnings heavy week. Indian markets rebounded quite sharply on Friday, and overnight cues too are quite positive. The US markets ended at record high levels. All indices in the US ended with gains. When you're talking about oil prices, very supportive. They ended lower, in fact, almost 7% lower in the week gone by. Brent futures now hovering around the $73 a barrel mark. Now, talking about the Indian markets, remember, they managed to pay a significant amount of the weekly losses that they were facing last week in Friday's trading session. What aided on Friday, it was mainly the banking and the financial heavyweights that aided the up move. HDFC Bank, ICICI, all of them, as well as Axis Axis Bank aided the up move. And when you're talking about some of the down move stocks, sitting at distribution companies, and they'll continue to remain in focus, all of them saw significant selling pressure as far as Friday is concerned. Quite a lot of earnings that has trickled in post-market hours on Friday. So HDFC Bank, Kotak Mahindra Bank, RBL, MCX, Oprah Realty, all of them will react. And they are all significant heavyweights, especially the banking names as far as the banking index is concerned. So the market will take cues from those earnings reactions. Earnings today, the main one today is Ultratech Cement. Eyes will be on the cement pack post Ultratech's numbers.
Interesting, Vivek. Thanks a lot for that. All eyes will be, of course, on the reaction to a lot of these banking results. Over to Winnie now. Would list out the stocks you need to watch out for. Winnie, good morning. What's on your list?
Good morning. So I'm going to start with those banking names that are going to be in focus. HDFC Bank, a steady quarter that's coming from the company. We're seeing NII growth of around 10% on a year-on-year basis and a very flattish growth on a quarter-on-quarter basis. Let's keep an eye out on that. The provisions have seen a bit of a downtick. So just a steady quarter, could be a bit under pressure today. We'll watch out for HDFC Bank. We also have Kotak Bank that's in focus. Not a great set of numbers that's coming from Kotak Bank. 11% uptick in terms of NII. Operating profits seeing an increase of around 10.6%. This is on a year-on-year basis, while the asset quality GNPA is at 1.48% versus 1.39%, so slight bit of an increase there, so keeping an eye on that. Tech Mahindra also reported its numbers. Overall, we're seeing the profits have seen a sharp jump up this time as well. 46% uptick in terms of the profit on a quarter-on-quarter basis. Rupee revenue, that's seeing an increase as well, so that's rupee revenue is up by around 3%, so keep an eye out on Tech M. Dalmia Bharat, weak set of numbers reported by the company, lower than expected realizations, higher than expected costs. Realizations were down by around 9% YOY and 6% QOQ, keeping an eye out on that. Lastly, JSW Steel also is in focus on the back of acquisition that they made, 100% stake in Thyssen Group Electric Steel India for 4,051 crores. PNC Infra, there's a bit of a setback coming in as Ministry of Road Transport and Highway India has disqualified the company and 2 subsidiaries to participate in tenders for 1 year. And Garden Reach Shipbuilders also in focus. They've received a letter of intent from Naval Physical and Oceanographic Laboratory, Government of India and Ministry of Defence, and this is for around 491 crores. So on the back of that, we could see some focus.
Interesting news there coming in. Vinny, thanks a lot for that. And lastly, Mangalam joins in with cues from the FNO space. Mangalam, good morning. 25,000 holds the key for the Nifty. What's the setup on the FNO side looking like?
Well, if you look at the indices on Friday, there was a bit of an uptick that we saw. The GIFT Nifty is indicating a mildly reddish start, but nothing really to worry about. What was important was that the Nifty snapped a 3-day losing streak on Friday. In fact, on Friday, the Nifty's close was about 104 points higher, which implies that it gained about 104 points for the 378 points that it lost in the previous 3 trading sessions. And it was the Nifty Bank, as you can see, which led from the front with a near 1.5% gain. And that will be in focus as well. What's important, however, is that, the Nifty's low on Friday was very close to the 100-day moving average. So does that become an important technical support or not is something that we'll have to watch out for. The FIs, they continue to sell in our markets. No problems out there. I mean, no respite out there, let's put it that way, but no problems either because the DIIs are buying the FII selling dollar to dollar as well. What was interesting also is that on Friday's up move, because the FIs were so heavily net short, they had to cover some of their short positions. So that led to about 7,000 short contracts being covered. But despite that, the FI net positions are still 1.6 lakh on the obverse, on the short side, and their long exposure is just 34%. On the other side, the clients, the HNIs, they are 2.17 lakh contracts net positive, and net long exposure is 63% as well. Telling you that at the lower level, of course, there would be some support coming in for our markets. Where are those lower levels? Friday's low comes into picture because the 24,600 put has been pretty active. And on the way up, we'll watch out for the 25,050 to 25,000 mark itself, given the call writing that we've seen at 25,050 and 24,900. Just keep an eye out on the 50-day moving average and the 20-day moving average. Nifty Bank holds the key. It rallied about 1,000 points from the lows on Friday and conquered the 100 and the 50-day moving average. It's the 20-day moving average which will be in focus. Watching out for Aarti Industries and Birlasoft, which has entered FNO ban, and out of FNO ban is Manappuram and RBL Bank also reacting to results today.
Swinging like a pendulum between its 50 and 100 DMA is the Nifty Bank. Thank you so much, Mangalam, for that update. Time for a short break. Up next, we get you a fine print of all the second quarter numbers from HDFC Bank, Kotak Mahindra Bank and Tech Mahindra. Stay tuned. Back on the other side. Welcome back. Time to focus on some important earnings that came in over the weekend. HDFC Bank reported a steady second quarter, while Kotak Mahindra Bank reported a weak one. Abhishek is joining in to give us a fine print of both the banking names. Abhishek, good morning.
Good morning, Omas. To begin with, SDFC Bank, as you mentioned, it has been a steady quarter. Look at the numbers. Both the NI and PAT has beaten our poll. The net interest margin on total asset declined by 1 basis point quarter on quarter. This is in line with what analysts were expecting. However, fee income grew by 15.5% quarter on quarter, and that surprised positively. Slippages came in below analysts' estimate at 7,800 crore. Analysts were pegging at 8,000 crore. Even sequentially, the slippages have declined. Gross NPA ratio has inched up by only 3 basis points quarter on quarter, and this is despite the fact that the loan growth has been weak for them. So return on asset is the highest in last 4 quarters, coming in at 1.96%. They have used 700 crore of contingent provisions this time around, so it's now down to 13,800 crore versus 14,500 crore in the previous quarter. Their credit deposit ratio continues to improve, and it is at 5-quarter low and below 100% for the first time in last 5 quarters. With reference to the subsidiary SDB Financial, that AUM growth was around 27% YOY and about 3% sequentially. Coming on to Kotak Mahindra Bank, it was a weak quarter all round. So take a look at deposit growth on a YOY basis at 15.1% is perhaps the lowest that you are seeing in last 7 quarters. Advances growth of 14.7% is the lowest in last 12 quarters, and sequential growth of 2.45% is the lowest in last 13 quarters. So the net interest margin was impacted. It is below 5% at 4.9%, which is the weakest in last 10 quarters. Cost to income ratio is the highest in last 3 quarters, and their operating profit declined. That's the worrying part. It declined for 2nd quarter in a row, and for the 4th time in last 5 quarters, it's seen a decline on a quarter-on-quarter basis. So they had higher provisions this time around, which led to PAT growth of less than 5%, which on a YOY basis, which is the lowest in last 12 quarters. Slippages were very elevated, coming at 1,875 crore. Morgan Stanley were estimating at 1,630 crores. Annualized slippage ratio is the highest in last 9 quarters, coming in at 1.88%. With reference to the PNL, the NI is a beat. However, PAT is below our poll on account of elevated provisions. Back to you.
Watch out for reactions on both of these banking heavyweights. HDFC Bank and Kotak Bank might just determine where the Nifty moves in today's session. Let's also listen into what the management of HDFC Bank had to say in their earnings call regarding the bank's growth rate.
This year, as we run along, you would see that we are growing loans at or slightly below what the market is trying to grow, right? And what is that rate of growth? We don't know, but we know that it is converging towards the deposits, right? So that, and then over the next year, we would be growing at or slightly above that rate of what the market is growing, and then the following year we'll be at our historical range of what we have done.
Let us also now listen in to what the CEO and CFO of Kotak Mahindra Bank had to say about the company's 2nd quarter performance and the RBI embargo on its tech.
This was the first quarter where we saw the full impact of the tech embargo. But despite that, we grew customer deposits by over 16% year on year, and our CASA ratio stabilized at 43.6%. Slowness in the rural aspects of India, and that was reflected in loans made, commercial vehicles, tractors, and of course we've seen some stress in the microfinance industry, as well as some over-leveraging of customers, which reflects up in personal loans and credit cards.
It is from the credit card, mainly from the credit card business, which is contributing to the gross NPA increase and the provision increase. So I think that the percentage increase is in line with the industry as well as, but I think you also need to understand, because of the embargo, our credit card book is not growing, right? It has remained stagnant, because we are not able to add the new cards. The increase in the slippage, which you see, around 30 to 40% of that slippage would be from the credit card.
Now, the other major number that came in over the weekend was Tech Mahindra, because the numbers were marginally better than what was the street estimating, with the US dollar revenue growth coming in at 1.9% compared to an estimate of 1.2%. Rima is joining in with the fine print. Rima, how do the numbers look like?
Well, so the expectations were low for Tech Mahindra for the last 2 quarters, and the company has done better than that. So in that sense, it's a stable quarter, positive but on low expectations. So the company's top line growth, dollar revenue, as you pointed out, 1.9% quarter on quarter. Constant currency revenue growth has come in at 0.7% sequentially, at a similar number to what the company did in Q1. The key drivers for the company were, one, telecom, which is 33% of the overall revenue. That grew by 2.7%. High-tech was strong, and even BFSI, because the company is focusing on BFSI as a sector that they want to grow, and that saw a growth of 2.4%. Margins for the company continue to expand, up 110 basis points, quarter on quarter, 9.6%. Profits saw a big jump of 46%, aided by higher other income. But that said, analysts said that the company has an aspiration that by FY27 end, there will be an industry-leading growth and EBIT margins. So while these numbers are good, they're a step in the right direction, it's still going to be a little challenging for the company to achieve its FY27 aspiration, but we'll have to see how that plays out.
We'll keep an eye out on that. Rima, thanks a lot for that update. And as we slip into a short break, here is a programming note. As CNBC TV 18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC TV 18 Global Leadership Summit, bringing together visionary policymakers, industry leaders and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. Don't miss your exclusive opportunity to be part of this conversation that is shaping the future of business and innovation. Reserve your spot today. Welcome back, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. It was a pretty bad week for oil prices last week. What's the update this morning?
Well, yes, 6% of decline in the crude oil prices in the previous week, and that's exactly where we seem to be languishing right now as Hormuz. For this year, 2024, now we've turned negative for both the crude varieties, the US and the Brent prices. But the strength continues in case of the precious metal prices. If you look at gold, we're trading at a record highs in the Asian markets right now. It has been a 3% of gains in the previous week, and with that, the prices have gained about 33% in this year until now, which is the best yearly gain that you've seen in 14 years. And not just gold, the silver prices really chugged ahead on Friday. We did see prices gain up by 4% on Friday, and with this, we are now up by 42% for silver. It is trading at a 12-year highs right now. With what China seems to be doing, it is a good support that we've seen come in for the base metal prices also. So on a week-on-week basis, all the metals are trading in the positive. On a monthly basis as well, we are up by anywhere between 4 to 8% for many of these metal prices. With China also now cutting its LPR by 25 basis point has been supportive. And remember, China third quarter GDP numbers, retail sales, China industrial output, all of those numbers have been on the positive side as well. So while China hasn't done a big bang stimulus measure, but small measures that it has been doing finally seem to have shown results in the month of September. October is going to be quite important. If we do see sustainable gains, then metal prices are coming back in favor on a very, very strong way.
Keep an eye out on all of these metal names as well. Manisha, thanks a lot for that update. Now, several flights across India received bomb threats yet again yesterday, prompting the authorities to activate emergency protocols and pilots to land their aircraft before reaching their destinations. 24 flights, 6 each from Vistara, Air India, Indigo and Akasa Air received bomb threats, which were later determined to be false, similar to the previous incidents. Since Monday, more than 80 flights operated by Indian carriers have been affected by such hoax calls. This has disrupted flight operations, resulting in delays or diversions for thorough security checks. On Saturday, the Bureau of Civil Aviation security officials held a meeting with the representatives of the airlines to discuss the situation. The Civil Aviation Ministry plans to put out in place a stricter norms to prevent incidents of hoax bomb threats to airlines, including placing the perpetrators on the no-fly list. And with that, it's a wrap on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call sets you up for today's trade.